What is up, guys? Hope you all are doing good. I'm doing well. In this video, I'm going to talk about my plan to retire early or at least have a financial independence. So if you're interested in that, stick around and hopefully you'll learn a thing or two. So if you're new to this channel, my name is Khan and I showcase this portfolio of mine. I have multiple portfolios here, but this is one of the portfolio that I'm documenting for my FIRE journey or financial independence retire early journey. So I do have a 9 to 5 job that feeds this portfolio. I've been making good amount of dividend income from this portfolio as well. And also I've been selling cash secured puts and covered calls on my existing stocks in order to make more money, that is weekly options that I sell. So all in all, I've been showcasing my videos and in my videos all the portfolio updates that I've been making for the past couple of years. But for the past year and a half, I've been very consistent making these videos. I tell you and share with you guys all the updates that I make on this portfolio, and that is how I've been able to get over 1600 subscribers here. So thank you guys for watching, and now let's jump right into my latest moves. What I've done in this week is I have enabled margin on my account. What is happening on this margin money is that if margin money gives me, say for example, $150,000, I am only able to sell options on $75,000 worth of margin money. And that is basically half of what you actually can borrow. So that is how margin money works in Robinhood terms. Again, every platform is different. Interest rates are different for each platform. So maybe if you are selling options and have margin enabled in Fidelity, then you may have different results than I have here on Robinhood. Anyway, what I've been doing is I've been selling cash secured puts on MSTX as well as covered calls. So recently, what I did a couple weeks back is I bought MSTX 500 shares. I thought MicroStrategy is going down a lot and it should not at this pace because Bitcoin prices have been very stable for the last few months. But since July 16th, MSTX and MSTR, of course, the underlying stock that it has, have been going down. And from a value of almost $50 per share to now less than $24 per share, and my average cost is $23.25. I grabbed 500 shares, and what I did with this is I sold 4 covered calls. So I kept 100 shares to keep the upside coming. So I'm not gonna sell a covered call on those 100 shares unless they are over $30 per share, so that I can collect good premium. But I'm gonna sell 4 of the 500 shares. So 400 cover shares will be used for covered call, and I've been granted some $75 per covered call. I think the credit was more. Now it's down to 73. So I was credited $1.50. So I'm 51% in positive. So if I close this trade right now, I'd be able to make 50% of my money back. But that's not what I'm gonna do right now. But point being, I'm selling covered calls on MSTX, as well as you can see here, I've sold some 7 contracts of cash secured puts, meaning I put down $700 worth of shares amount, multiply that by $20.50 per share. So that comes out about 17,000 or something. And that is what I have put down for selling cash secured puts on MSTX. And my average cost, if I were to get assigned for these 700 shares at this price, would go down significantly. Of course, it will still be higher than $20.50, but it will be lower than $23.25, which I have currently for my 500 other shares. So that is what I'm doing with MSTX. And then for this week, I also sold 30 contracts of cash secured puts for Connell or Coinbase 2x leverage ETF. What I'm doing here is I collected 5 cents per share. So for 36 contract that I have, I collected roughly about $150. So, and this again, like I sold that really out of the money put, which is at $26. Current price is almost $37, So there's a gap of $11 that it has to fall in order for me to get the share. So basically, this $150 that you see here are all pure profit without any without any of my own money used. So that is where I am with this 30 contracts. I think I mentioned 36 earlier, but this is 30 contracts at $26 per contract. And then I also have a SOXL call, covered call that I'm selling for October 3rd, which is at $30 strike price. Currently, SOXL price is 35, so this will get assigned, and I will lose my 100 shares at $30 per share, and that is what the downside is for covered call. So currently the price is 35, but I'll be getting only $30. But I also made some $79 here as well, so 79 cents per contract, per share, and then that translates to $79 per contract, which is 100 shares. So I made some $79 there as well. But my average cost on SOXL is important, which is only $19.84. So I'll be pretty much making $11 from this SOXL move that I have taken. So these are the running options that I have, and then I also showcase my my daily recurring investment. So in IDVO, I have now 17.78 shares in AIQ, which is a artificial intelligence ETF. I have close to 14 shares in SPMO, which is Invesco's Momentum ETF. I have over 9 shares, and Berkshire Hathaway of more than 2.5 shares. I also am investing in SPY and QQQ, basically Nasdaq 100 and S&P 500. These ETFs are my core holdings. As you guys can see here, I have invested in QQQ roughly about $65,000, and on SPY I have my position of over $70,000. So if I were to liquidate this and start selling cash secured puts and covered calls, I'll be easily able to generate over $1,200 per week from this. But I'm not gonna do that since I am trying to grow this portfolio as well, and since I have a full-time job right now, so I don't want to do that with the current positions that I have. Maybe later down the road, maybe 5, 7, or 10 years from now, I would do that. I would take my profits out and then start selling cash secured puts and covered calls, and basically make enough money to have my full-time income replaced. The target is, initially when I started, the target was 17 years, but with the pace that we are moving here, so I'm almost making $300 every single week by selling options. The that target is not gonna be more than 12 years away, meaning I will be able to replace my full-time salary by this portfolio. And again, I could just buy high income ETFs, but that's not the route that I want to go with, since I know I can do the same thing without paying any expense ratio. And the exception here would only be for the ETFs that I pick, because right now I'm taking ETFs like MSTX and CONL, which are leverage ETFs of a single holding. But I might not do that in retirement. I might go a little conservative with ETFs like TQQQ or SOXL, or the SPXL, which is S&P 500 leverage ETF. So that is what the plan is. Hopefully, I'll be able to execute it, and hopefully, I will see a good update on this portfolio every single year till my retirement age. Of course, we're gonna see some downturns and some down days or weeks or even months or maybe a year or 2 years as well. But the point here is to make consistent income by selling cash secured puts and covered calls, which is, I think, the key to success for this portfolio. Because I I think personally what QQQI and other SPYI and other high income ETFs that are paying high income, they are doing the same thing. Basically, they are selling covered calls and cash secured puts in some cases to generate passive income, but then their expense ratios are so high that on a portfolio of a couple $1,000,000, you are literally paying thousands of dollars just to do the same thing that you can do by your own self, over or just spending 10 to 15 minutes a single day, or maybe half an hour in a week. And that is what I usually do. So unless I'm making a video, I do not look at these options that I sell, because I'm willing to buy 700 shares at $20.50 for MSTX, and same goes for Connell. I am willing to buy 3,000 shares, meaning 30 contracts here for $26 per share. So that is why I say that whatever these investment um, uh, portfolios are doing, basically I can do it by myself, and that is why I think it's important to learn about this stuff. This is no rocket science. It's just a transfer of money from someone who is little speculative in his stance versus you who want to own an asset at a lower price than today's market value, and that's when you get consistent income. And if you see here, I also have some income on the side. So if things go south, I can put down that money back and maybe start buying these ETFs at a lower price. And that's what the goal is. So that's, I think, is it. And I hope you guys like this video. This is again a documentation, a journey, and my journal for my financial independence and for my family and my friends. This video series is for them all to look back and reflect on this and how I was able to build this portfolio. So thank you guys for watching. I hope you guys like this video, and please follow, subscribe me, and I'll see you guys in the next video. Till then, take care of yourself and people around you. Goodbye.